Welcome back. We get an earnings blitz this morning. General Electric first quarter results hit the tape with a double beat this morning. Profit was at 16 cents a share, better than the estimate of 11 cents a share. Revenue at $28.66 billion, better than the estimate of $27.45 billion. The stock is up almost 6% right now. It has been moving up all morning, and it has completely reversed markets, which were down about 80 points earlier. Now the Dow Industrial showing a gain at the start of trading. So GE powering this market this morning. Joining us right now to talk more about the numbers is former Home Depot CEO and former Chrysler CEO Bob Nardelli, who was an executive at General Electric for some 30 years. Bob, good to see you this morning. Thanks very much for calling in. Your take on this report?
So, Maria, good morning. I think GE had a very good report this morning. I think the highlights, certainly if you look at the 4 cents earnings per share on a GAAP basis from continuing operations, I think the reconfirmation from John about cash flow and taking cost out, the $2 billion, his recommitment on, taking about $20 billion of assets out, reconfirming the earnings per share, reconfirming the dividends. I think he had 4 or 5 very positive points to report this morning. We'll hear more at the earnings call later this morning. As I look at the consolidated earnings statement, something that I think certainly allows him to continue this performance is, while you mentioned revenue was up, total cost for the business was up 5% on 7% revenue. I think there's an opportunity to get better leverage there, Maria, going forward. If you look at the segments, overall, total industrial was down 5% in profits, but mostly that was driven by GE Power, which was down about 38%. So again, a lot of focus has to be in that particular area. When I look at assets, I think one of the things that stands out is if you look at cash, it was down year over year, quarter to quarter. It was about $70 billion from 82, and I would have thought inventories, again, another opportunity. Inventories were up 6%. I know revenue up 7, but you got about $20 billion of inventory. And if you look at power, from my experience, I'm not sure how much is there. That certainly represents an opportunity. So I think overall, solid report,
right,
good progress, and a lot of areas of opportunity.
So the CEO, John Flannery, Bob, says that he's seeing signs of progress in the company's performance. Do you still expect asset sales? Obviously, a lot of assets have been sold. This is a much smaller company than it was before.
Yeah, I think, his reconfirmation, he said late last year at the analyst meeting that they were looking at disposing of $20 billion of assets. We saw that they sold a small portion of the healthcare business for about $1 billion. He had talked about transportation being on the market. It looks like they had a good quarter. Not sure what his decision will be there. But I think that's an area where most of the analysts in the street looking for the disposition of assets to cover the significant exposure on pension and overall debt, Maria. So right. I think he really has to crank that up to be able to deliver on those commitments.
Hey, Bob, Gary Smith here in New York. When you were CEO of some pretty narrowly focused companies. GE obviously is not, and you were with GE a long time. Do you think there is a future for industrial conglomerates like GE, 3M?
Gary, I really do. I'm a big fan of, my tenure at GE with Jack Welch. And I think, certainly if you look at what Dave Cote did at Honeywell in his tenure, I think it takes a certain individual to be able to run a conglomerate. But I think if you look at the opportunities and the cyclicality of various businesses, it's a huge competitive advantage to have a conglomerate to be able to have the goes-ins and goes-outs, Gary. So I'm a big fan of conglomerates, right, and I think they could be successful.
So this was just a GE story in terms of the conglomerate.
Right.
Not necessarily a look at us all conglomerates, is what you're saying. The missteps here was just really GE-specific, Bob.
Yeah, I think, again, I don't point the finger at anyone, but, you had a 19-person board and a leadership team, and it takes a certain sense about running a conglomerate. And if you look at Jack, he was knee deep in every one of the segments and knew them as well or better than the people running them at times, Maria.
You're right.
So I think listen, this is a good quarter. I mean, we talked about if it was not, we could see the stock go up 5 or down 5, and I'm glad. I'm really pulling for GE, and I'm glad to see these results.
All right, we will leave it there. Stock is now off of the highs, but nonetheless up 2.5%. Bob, it's great to talk with you. Thanks so much for walking us through this.
Thank you, Maria. Have a good show.
And to you, and have a good day. Bob Nardelli there.